Hello everybody and welcome to the Cyclical Investors Club YouTube channel. My name is Corey Kramer. Today we're going to be analyzing Lam Research Corp, ticker LRCX. This one came in by request down in the comment section of one of my other videos. If you have a request, put it down in the comments. I'll get the ticker on the chalkboard behind me. Eventually I'll make a video for you. Just erase that last column, so I'm making a little progress here. As always, this is not individual investing advice. This is just how I analyze stocks. So I had a comment from one person. It was a really good comment, and they pointed out that the name of the Cyclical Investors Club didn't really match the type of analysis that I was doing, and they were right. So when I first started doing stock analysis, I developed this strategy for analyzing deep cyclical businesses and trying quality deep cyclical businesses and trying to find good prices to buy them at. And that's kind of how I got my start back in almost 10 years ago. And so when I started the Cyclical Investors Club in the beginning of 2019, that's what I kind of named it for. But since I've had that service going over on Seeking Alpha, I've added a lot more strategies, and now deep cyclical stocks are they're the far minority of the stocks that I purchase. So they're more like 20% maybe of the portfolio. Part of that's just because of the environment we're in. But what I found was, when I really had time to do the research, was there just really weren't that many high quality, deeply cyclical businesses out there. A lot of businesses have tried to become less cyclical. And also the quality part is what makes it kind of tricky. I estimate there's maybe 100 publicly traded, decently sized, deep quality, deep cyclical businesses out there. So that's just not a very big universe of stocks. And I realized pretty quickly that if I did more research and developed more strategies, I could kind of expand the number of stocks, the types of stocks that I cover. And so now I have pretty much a full service where there's plenty of stocks that are just too hard, in the too hard category, but I actively track 700 stocks now that have kind of passed my initial screens, or they're stocks people ask me about all the time. Even if they don't pass, I'll put them in, so I have the data there for people to look at. But yeah, I've probably increased the universe of stocks that I actively track 10 times, over 10x in the past since 2019 or so. So getting back to the roots here, Lam Research is in the semiconductor business, semiconductor equipment makers, how I think of them. We'll see what they say down here. Materials and equipment, yep. And $100 billion, $111 billion company, so big one. So when we go to check to figure out whether they're cyclical or not, we want to go back and check their earnings. So I like to, now pretty much any semiconductor business you should probably, 9 out of 10 of them are going to be deeply cyclical. But I always go on a stock-by-stock basis and just go and look and see what history actually has to say about that. So we can see that during the Great Recession, which was the last real recession we've had, earnings went totally negative. So usually if they're deeper than 50% drawdown, and they come back, I consider that deeply cyclical. So these guys had a 2-year decline of over 100% and then bounced back, made a new high. That's a cycle, basically. Then they fell again, and then they took a little longer to come back. Let's take a look here, how long. So, and then this is kind of a more normal cycle where earnings-wise, this could be company-specific too that caused this. But, about 5 years or so to come back off of that one. This is a deeply cyclical business. Now that said, semiconductors right now are in a little bit different situation than they were in 2008. Definitely more of a secular growth trend. So we've had downturns, as you can see, in 2019. Their fiscal year is kind of halfway through the year, so that can influence this number a little bit. Most semiconductor stocks were down pretty deeply during this drawdown, but that was a down cycle. And then we had another one last year for them where earnings fell 11%. But because there's an underlying secular growth demand, these cycles have just gotten shallower. So it makes it a little trickier. I like to go back and look at past cycles try to use those as a guide for the future, but you have to kind of use your own judgment as well. Now, what makes these difficult is when earnings go completely negative, like they did back here, the PE ratio, well, there wasn't even a PE ratio to like look at, but when they're cheap, the PE ratios can look high. Maybe right here is better to look, right? And when they're expensive, like right before the crash, the PE ratios look low, like 12, something like that. Maybe this is a good example. Again, near the peak at 12 PE. Now, the earnings didn't eventually fall that low, so the PEs actually worked out. But with some cyclicals, when earnings start dropping, the PE ratio goes up. That's usually a down cycle. Usually the stock is falling, and that's usually when you want to buy. Sometimes there's a year delay. Like the market kind of can anticipate these a year or two in the future. And so you can kind of see that happening too with the stock price. But basically, they're deeply cyclical businesses that are in a secular growth trend. So how do we deal with that? Well, I still use the same method I did before. I just try to put some judgment on top of it. And we want to make sure these are high quality cyclicals, but you can see that over time, earnings are making new highs each cycle, right? And the lows are higher each cycle. That's what you want. And you want a relatively quick recovery time. Let's go to drawdowns. So actually I want the other one first. All right, so this is going all the way back to the 80s, and this is a drawdown chart to look at the stock price and how far it fell. Because earnings are unpredictable, we can't really easily use an earnings analysis because the earnings go up and down so much. They vary so much. But we can go back and look at how the market treated the stock in the past during downturns. So, and we have drawdowns, like we have one. And granted, this is going back a long time, but it just shows you what's possible. A lot of times people buy these stocks, they don't even know what's possible on the downside. So this looks like maybe a 75% drawdown in 91, 1998, like a 80% drawdown. The dot-com bust was more like a 90% drawdown. And then we get more into the modern era, which is what the second chart is, so I reframed it. So we're starting kind of in 2004 or so. So even kind of more modern times, during the Great Recession, we have a 75% drawdown, almost a full recovery here, which is good. And then eventually a real full recovery. And then this was actually a pretty big downturn for the semiconductor industry in 2018, but Powell came in, reduced interest rates at the end of the year and kind of saved everybody. So we have kind of like a little over 40% drawdown here. The March crash in 2020 didn't affect semiconductors too much compared to the rest of the market. But then in 2022, we have, I think this was like a 55%-ish drawdown here. So even as close as 3 years ago, we can see the cyclicality is in the stock price for sure. And that it's more cyclical. The stock price is more cyclical than even the earnings. So we had earnings. Maybe they were anticipating this decline, right? The market was anticipating this decline in 2024 and kind of slow down in 2023, sent the stock down 55%. That lets you know nothing's changed with the stock, right? So the history is probably likely to roughly repeat. I mean, but these are huge moves. So you're not trying to use... You're not going to be able to have a lot of precision. You just want to, for me, I want to sell these when they start making new highs. If I bought them, I didn't buy these guys down here because I think I was looking for more like a 60% drawdown, probably 60 or 65%. So it didn't quite get there. But I probably would have started taking profits. That actually happened. I bought AMD down here, and I took half my profits right about there when it started making new highs. I don't think AMD actually had made new highs yet. I still own half of it. But basically, and that gets you usually a double, right? I don't usually buy until they're at least, right? So 128% return. I don't usually buy these unless they're at least 50% off their highs. Then if I can get 100% return, even if it takes me 5 years sometimes to do it, I get like a 15% CAGR, and I'm happy with that. And then if it happens faster than that, then that's even better. Lately, I mean, these cycles have been pretty fast, so like 2 years sometimes, and you've got a double, and you're up to making new highs again, right? But it's hard to know where they'll peak. They can basically fall at any time. I mean, the poor folks that were buying right here, let's just see how long it took for them to lose money. Probably a matter of days. Let's just go there. So 1 month, it fell 30%, right? And I'm going to say there's probably not really any warning about that. It just happens. So the bottoms just can fall out of these. And if people aren't used to these cyclical businesses and the cyclical stocks especially, they don't understand that like a 30% drawdown means hardly nothing for a stock like this. A lot of people will come and start buying too early, and a lot of people, will be hanging on or buying near the top, expecting it to behave like a normal business with earnings growing at such and such a percent. 20, like this year looks like they're supposed to grow 20%, 24%, and investors might be buying into that, kind of extrapolating that out, not counting the years when they fall 65% or something like that. And so that's kind of the mistake that's usually made. So the main thing I like to do is just always try to buy when they're in a drawdown. Always make sure it's at least 50%, and then use history as a guide if it's a high quality business to see what the most likely outcome. And you can look at the industry and what's happening. We have a secular growth trend here, so it might not fall as deep, but that 55% drawdown happened without a recession. So if we had a recession on top of it, you have to understand that if you buy after a 50% drawdown and it ends up drawing down 75%, you don't lose 25%, right? You lose 50. Think of a stock that peaks at $100 and you buy it at 50. Well, if it eventually draws down 75% off its high, it's going to go down to $25, and $25 is half of 50. So a lot of times people will buy these on the way down and not really realizing, how much they can draw down. Now, if it's a high quality one, eventually they'll come back, but I want the risk. They're always riskier when they're more cyclical, but I want the rewards, to outweigh the volatility, even if it's a good company, and how long I might have to wait for a recovery. So that's how I think about all that. And I'll give you my buy prices real quick here. So this one checks out on all the quality stuff. It's great business, just cyclical, and you just want to know what you're getting into, basically. So if you've seen this spreadsheet before, this is set up a little differently right now for cyclical businesses. And when I look back at their history, so we can see we have this 84% drawdown from 2001 area, 68% drawdown in 2008, 43% during the March crash in 2020, and then this middle one in 2022 was like 55%. So that gives us we can kind of see the secular growth is improved over this time because it's not falling quite as much during each. Well, this drawdown, this was just an estimate here, but it was actually like 55%. So we know it's still cyclical. If we have a recession, it probably will fall down in this 2008 range, and maybe even more because it wasn't really valued very highly in going into 2008. Let's go back and look at it. Sometimes I like to look at peak PEs to compare cycles. So the PE during the peak back here, we looked at it earlier, was like 12, right? Assuming that this is a peak here, the peak PE was 35. And back in 2022, which might be the most accurate one to use because we had this little earnings drawdown here, that one was 23. So the peak PE going into whatever drawdown period we're in now is like double, let's call it at least double what it was going into 2008. And back then it fell 68%. So there's a good chance the market will send this stock very deep. So my strategy for this one is I want to give it credit for the secular growth, and I have plenty of cash. So I'm willing to add a partial position This is after a 50% drawdown off the peak. So that's $54.73. And then my kind of next addition would be when it gets down to $33.90. That will be I think that's a 70% decline off the high. So I'm taking that kind of, maybe it's a short drawdown like we had in 2022, because you never know if stimulus is going to come in, what kind of countermeasures are going to be taken. You know, maybe AI is even more important. I mean, who knows? Tariffs, global like anything could make a down cycle shorter than normal, or it can make it longer than normal. And we don't always know then, but we do know that if you buy usually after a 50% drawdown, you'll do pretty good, even if it takes you a while for the stock price to recover. But you have to keep in your mind that it could definitely go lower. And I think in a recession scenario, coming off the high peak PEs that we had, buying at a 70% drawdown is a pretty good spot to add. And then you just have to, because the world will be falling apart if that happens. But historically, it's always recovered. So by taking that risk when things are potentially really scary, you know, imagine you're buying a $100 stock at $30. Well, you have what, 60, 90, right? And then another 10. So 233% return just if it returns to normal. You can hold on to it for a long time, you know, before that happens, and still have a very good return, right? So that's kind of how I think about it. I think that's all. I have weekly picks over on Patreon for $25 a month, and I also have a free tier over on Patreon, so make sure to check those out. If you have a request, put it down. I have those links in the description, by the way. And if you have a request, put it down in the comments. I'll get back to you when I get the ticker on the whiteboard. I'll see everybody later. Bye.